Welcome to The Explainer. Today, we're diving into something that affects pretty much everyone in Malaysia, tax administration. I know, it can sound kind of complicated, but don't worry, we're going to break it all down for you step by step.
So let's just cut to the chase. What happens if you make a tax mistake in Malaysia? I mean, what's the real cost? It's probably a lot more than you think. And knowing the stakes, well, that's your first line of defense.
Okay, look at this number, 300%. And no, that is not a typo. For serious stuff like willful tax evasion, we're talking about a penalty that can be 3 times the amount of tax you tried to sidestep. That's not just a slap on the wrist, right? It's a massive wake-up call.
All right, so here's our game plan. We'll kick things off with your basic duties. Then we'll walk through how assessments and appeals work. We'll look at how you can get relief for honest mistakes. Then the really serious stuff, offenses and penalties. And finally, we'll see how tax actually gets collected. Let's jump in.
First up, your fundamental duties. You know, this is the absolute foundation of your entire tax journey. If you get this stuff right, believe me, everything else gets a whole lot easier. So, Malaysia runs on what's called a self-assessment system, or SAS for short. What does that actually mean for you? Well, it means you're in the driver's seat. The responsibility to calculate what you owe, declare it, and pay it to the Inland Revenue Board, the LHDN, is all on you.
In practice, this really boils down to 4 key things you've absolutely got to do. 1. File accurate returns and do it on time. 2. Pay what you owe by the deadline. 3. Keep good, solid records to back everything up. And 4. If you move, you've got to let the LHDN know within 3 months. That's pretty much the core of it.
And speaking of those records, how long do you have to hang on to them? 7 years. Yep, a full 7 years. That's the law. We're talking every single receipt, every invoice, every bank statement. Why? Because if the LHDN ever decides to do an audit, that paperwork is going to be your best friend.
All right, let's move on. You've done your part, you've filed your taxes, so now what? And maybe more importantly, what can you do if you get an assessment back and you think, hang on a second, that doesn't look right? Okay, here's a term you should definitely know, deemed assessment. When you file on time, the LHDN basically accepts it as is, without an immediate review. It's kind of like they're taking your word for it, for the time being. But, and this is a big but, that doesn't stop them from coming back and taking a closer look later on.
Now, if you do disagree with an assessment, you're not just stuck. You have a clear path to appeal, but you have to be quick about it. The clock starts ticking the moment you get that notice, and you only have 30 days to file. First, it gets reviewed inside the LHDN. If you still can't reach an agreement, it's not over. Your case can be escalated to the Special Commissioners of Income Tax, who are an independent body.
But what happens if the shoe's on the other foot? What if you're the one who realizes you made a mistake? You know, you're looking at a past return, and you have that oops moment. Well, take a deep breath. There's actually a safety net for honest errors like that.
This safety net is officially called Relief for Error or Mistake, and it's pretty much what it sounds like. It lets you apply to get things corrected if you find an error, like if you've overpaid. The crucial part here, though, is that you have to be proactive. You've got a 5-year window to make that claim, so don't sit on it.
Okay, now let's talk about the sharp end of the stick, the offenses and the penalties. This is where things get really, really serious, and it's why all this compliance stuff matters so much.
Just take a look at this table. The penalties are no joke. Even something like failing to keep proper records could land you a hefty fine or even jail time. If you make an incorrect return, the penalty is 200% of the tax you underpaid. And like we saw, for willful evasion, it shoots up to that crazy 300% penalty, plus fines and potential prison time. The message could not be clearer. Compliance is not optional.
And listen, it's not just about the big fraudulent stuff. Just pay your tax bill late, that's an immediate 10% penalty slapped right on top of what you owe. It's a very sharp reminder that every single deadline matters. So after all the filing and the assessing and the penalties, we get to the final piece of the puzzle. How does the LHDN actually make sure the tax gets collected?
They've got a few powerful tools in their belt. There are the usual things like due dates and withholding tax, but one of the most effective mechanisms now is the Tax Compliance Certificate, or TCC. Since 2023, this has become a really big deal. If your company wants to tender for any government project, you must have this certificate. It creates a very direct link. No tax compliance, no government contracts.
So, when you put it all together, it's pretty clear that the stakes of your tax journey in Malaysia are incredibly high. But here's the thing. Knowing the process, your duties, your rights, and the real risks, that's what puts you in control. This isn't just about compliance.
It's about being empowered. So the real question is, are you prepared to navigate it?